Good afternoon, traders. Chris Buss here with Traders Profit Compass with a closing market wrap for Tuesday, July 13th. It's a little after 4:30 in the afternoon after the close. It took me a few minutes to update my charts and move a few lines around and gather my thoughts, so let's go through it today. Okay, starting up this morning, we had a hot CPI number, 9/10, which is month over month inflation, which is hot. I guess it was the highest in 13 years or something. But the market shrugged that off and proceeded higher off the opening, particularly in tech and large caps, SPY. And then at 1 o'clock, remember this morning I said on the macro that there was going to be a 30-year bond auction. And that didn't go so hot. Maybe that was affected by the CPI print, and rates rose. And that was reflected here on the 10-year Treasury yield, TNX. We had that. We had the low last week. It actually dipped below 1.3% briefly, but then came back above. And now we've rocketed back up to 1.415, call it 1.42%. And you can see here, I'm just talking technically now, we had a breakdown. We had a breakdown below 1.4, came down to 1.3, and now we're back testing 1.4. And we're back testing this downtrend channel that was in place since we printed that high back in March of 1.75, let's call it. So rates have been falling. We had the spike low, and then we had a back test. On TLT, which trades opposite, higher yields mean falling bond prices. So we've had this, rates were falling, TLT was rising. We had that, the spike low in rates gave us a spike high in TLT, and now we've backed off. And we're back testing now the 200-day in gold and the uptrend line here. And what I said, it wasn't this morning, but it was the day before. If we got a back test of the 200 and this trend line, I was going to buy it. And that's what I did today. I bought some short-term calls next week, next Friday, in the hopes that there's at least a bounce off of this trend line higher. And I'll get into the kind of the thesis of this trade, but just from a technical standpoint, this is an objective long. Why? We went up, we came back, we're back testing the 200 from above, and we're back testing this trend line. So in my trade, I'm long. If we break below 144 in TLT, simply put, I'm wrong, and rates are going higher. If TLT breaks down, that means rates are going higher. If I'm long, I'm wrong. So my stop is, let's just call it, a little below 144. Not much. Tight leash. I'm not going to have a lot of time here with a week and a half trade. I did see in the option market a relatively big risk reversal where he was selling a put spread down here and buying 155 calls way up here out in September. So we got at least one guy that took the opinion that they're going to fade rates and TLT will go higher. So he was selling a put spread to fund calls way up here at 155. So anyways, that's my TLT trade. Now let's go into SPY and see what we can learn. All the turbulence today was this one little micro spot here of a red candle. I mean, we were down 0.33%, which is basically nothing. As we discussed this morning, we're still above the 8-day. We're still inside our trend channel. No changes as far as anybody trading on the daily time frame. Stay long against the trend line. Stay long against the 8-day. If we were to break down from this tomorrow or in the days ahead, that would be a point where I would sit up and take notice. Hey, something is different. We've dropped out of the channel. We're below the 8-day. We'd probably be testing the 20. That would be a time to pay attention that something may be different. Going on to the 2-hour, I had drawn this tight rising wedge. We dropped out of that. Where would be a logical place to look for a bounce? It's going to be right down here at the top of the channel. Let's call it 434 for sure, but possibly 434 and a half, 435, right in there. If we drop below that, if we drop into the channel, remember our trading rules: a break outside, then a return to the prior trading range is usually bearish, from the standpoint that we could come down, we lose 433, then we come down and fill this gap and probably go down here and at least touch the midpoint. So if you're a short-term trader and you're paying attention to these shorter time frames, the place to really pay attention is right here at the top of this channel. Now let's look at an even lower time frame. This afternoon, there were a lot of buyers. You can tell the tails down below of this 436.50 area. That was an area of support, and then it failed. So we're down here at 435 and a half. We could easily come down in here to 434 and a half. That would align well with the 2-hour channel that I just showed you. In my mind, that would be a place to look for a bounce. We've got a large volume over price bar here at 433 and a half. That's got to hold. I mean, pure and simple, that has got to hold, or else you're down here testing this gap, could come all the way down to 430. And if you're on any kind of short time frame, you're not going to want to hang on, to a move down in here. I would be, if you didn't flip bearish right here on a short-term time frame, you've got to, really start thinking about abandoning your short-term longs into 434.50 and 433.50 if those levels don't hold. So look for a bounce here tomorrow, or if we recapture this level right here at 436.50, let's call it, that would be bullish. Recapturing a level from below, you can see that that was support and now it's resistance. So if we break above, then it's game back on to the long side. Qs, I mean, nothing. We broke a little higher, came back down. We've not broken this uptrend line that I have, still well above the 8-day. We've got some flattening of the PPO. You're not going to want to see that roll over. We're still above trend on our RSI. So on the daily time frame, I would say stay long. 2-hour. We started out strong and we faded, but we didn't give up the breakout. What do I mean by that? Here was the prior high. Here was a test of that high. We broke out, we came back, and we held it. So tomorrow, if you're trading any kind of short-term time frame, if you see 362 and a half break, then the next place to look for support is going to be down here at 359. And if you see a little fake move or a green bar to start the day, and then remember, Jay Powell is starting his testimony at 9:30. So say we come up in the pre-market or shortly after the open and put in a green bar and then come back down and that breaks because of something Powell says or just market conditions, then you've got to really pay attention, because we could come down here to 359 very easily, and that would be my first area to look for support. And if you wanted to take a tactical short, looks like you've got about $2.50 of potential downside before first level of support would come in. And then, of course, if 359 breaks, then you're coming down to 356. And, that would make this look like a fake breakout, which is never good. So 30-minute chart. We're right. I didn't move all these arrows, but you get the idea. The door is open down to 361 here. What I want to see is this 30-minute time frame get recaptured. And what would be really positive is if the Qs can gather themselves here at this level and then reclaim 364. That would be pretty bullish. Now, I want to let me see here. I want to talk to you about something here on IWM. Let's go back to our scenarios. We talked about the scenarios on the dollar and interest rates. Let's recall what they are. Scenario 1, falling dollar or stable dollar, falling yields, should be bullish tech stocks, right? Favoring growth. So that's scenario 1. That's the scenario that we've been operating in as yields have been falling. That's been a tailwind for tech, and big tech in particular. That's why all the FATMAAN trades that we've been focusing on have been working. Okay, what's the flip side of that? Scenario 2. Rising yield rate environment should be bullish. Cyclicals, financials, reopening trades, industrials, all the cyclical things should be positive in a rising rate environment. Now, we tagged 125 on the 10-year yield briefly, and then we bounced up to 130, and now we're at 140. So we've had 15 basis points of yield rise over the last, let's just say, a week. Certainly in the last 2 or 3 days, we've had 10 basis point rise. We've gone from 130 to 140 on the 10-year. That should be bullish cyclicals. But look, it's not. We finished on the dead lows on IWM. You would have expected that on that yield rate rise in the afternoon today, when yields shot up, you would have expected a reaction in the cyclicals. Did not get it. So something is awry. Either the cyclical stocks are lagging rates, they don't believe them, or the rate rise was fake, because the cyclical stocks, which are loaded in IWM, did not react. In fact, they went lower. So now we're in the middle of this range. You can see on the daily chart, we've lost all the moving averages. We're below the 8, 20, and 50-day moving averages. This is bearish. This is a bearish look. This is open to come back down right now to either test this low here at 218, let's call it, or even come back down here towards this 212 level. So the immediate concern for anybody that's looking at IWM is you got to get back above the 50 at a minimum to stop the bleeding. So let's look at the 2-hour. So we gapped down right out of the gate. I told you I was long IWM. Obviously, I'm out of that trade. I said that I was long against the 50 EMA, which is the same as the 200 on the 2-hour. This is the 50 EMA on the daily. We gapped down below that, and then my last stop here was at 225.50. So I'm out of that trade. And it went down. It would have been smart to flip, but I didn't. So this just, I mean, it went down the whole day. And what I want to point out is that in the afternoon, excuse me, in the afternoon at that, when the yield spiked at between 1 and 130, price on IWM went down. There was no bounce at all. And if you look on the 30-minute chart, you can see no bounce at all. In fact, we went lower, and we're in the process of filling this gap down to 222. So bottom line, I don't like to get into grand theses, that kind of stuff. I'm kind of, as you know, into levels, and price reveals all. But if rates are truly rising, that means banks should be rising. They were down 1% today. That means, airlines and industrials and, all that stuff should have got a bounce. They didn't. They went down. So what I'm thinking is, with TLT at support and with the cyclicals not responding to the rates, my idea is the rate rise is fake, in that they're going to start fading it from here. Jay Powell may have a lot to say about that tomorrow and the next day. Mostly tomorrow, because on Thursday he's just going to reiterate whatever he says tomorrow. So we got to watch that really, really close. And if you see rates continue to rise and you start seeing IWM respond bullishly, then there is a rotation afoot, probably out of tech in a rising rate environment and into the cyclicals. I'm not making that bet. I think they're going to fade rates. I think IWM is going to stay pinned down, and I think people are going to rush back into large cap tech. So let's look at it. Facebook. This needle bar out here was fake. Never made it that far. We had a little breakout here above this little flag, and then it gave it up, but it held 352, and that was a key level. That was the level that we broke above the other day. We had a spike low that we came back up and recaptured it. So this is still bullish. What changes that is a break below 352, because then you could see 348. And if yields spike tomorrow, or for really any other reason, if we break below 352 and you're long, I would get out. And that's short-term time frames, of course. If you're long-term, I think it's still bullish, and we've got earnings at the end of the month. But if you're a tactical trader and you see a break here, and I'm long, so I'm going to be doing exactly what I say. Tomorrow, if we lose 352, I'm going to be out, and then look to regroup down at 348 tomorrow. If it holds the line and drives higher, then, crisis averted. Apple. strong start to the day, big candle, big breakout here, and then kind of gave it up, came back down towards 144, and then closed up here towards 146. I'm looking for Apple to hold the line. What would be bullish? If you were just sitting there, not involved, I would be looking for a break above 146 tomorrow. And that would be back above the channel, back breaking out, bullish into earnings. But if you are not in and you see that they can't take out 146, then just wait for a pullback into 144. That would be a logical place for support, down around this midpoint or a little bit lower into 144. I would be looking for support there, and if that can't hold, it's more or less failed breakout and then pull back into the bottom of the channel here at 143. And if that doesn't hold, I don't know what to tell you other than that's bearish. Okay. Moving on to Tesla. We made a run up here to 690. I think that was at the beginning of the day. Pretty much down all day. 245. Tomorrow, got to hold 670. If you don't, then you're going to come back here towards 655, where there'll be another defense. I haven't drawn it in here, but notice that we've got a little gap here at 660. If they come back to try and fill that and come back into 655, so be it. But bulls definitely want to see 670 hold and keep that door open for a run back to 690 and a potential breakout here to 710. Microsoft, monster day. I mean, still up 1.32%, but it was up a lot higher this morning. You can see this big monster igniting candle off of 277, came all the way up to the midpoint here. I think it tagged 283. Yeah, 282.85 was the high, and then backed off of that. But all things being equal, it's still a bullish chart, well inside the channel. If I were to extend this a little bit, and I'll do that for tomorrow, but nothing here deters me from thinking this is bullish. Amazon, kind of a bad day. I mean, it was down 1%, but remember what I was talking about this morning. I wouldn't be surprised if after this big move there was a consolidation flag carved out, and that's exactly what we have now. We're at the bottom of the flag trading range. You want to see 36.75 hold, right? You break below 36.75, you're probably going to come down here to 3600, and then that won't look so hot. But if it does hold, then everything's intact. The bull flag is intact. If you are a active trader and you're comfortable with Amazon, you can be long against 36.75, 36.70, right in there. I mean, that is about as tight a long as you're ever going to get on Amazon. And then you can look for a move back up to, at a minimum, the top of the flag here at 37.60. And then if you've been going to church and the market gods are on your side, you'll get a breakout here ahead of earnings and then get another push. So Amazon is still intact. No harm, no foul. Just in a consolidation mode after this big run up. And if you take this flag extension, this move here, remember the axiom, bull flags fly at half staff. what that says is this move is only half over, and you take this measurement here and extend it, you're looking at 4,000, which was, more or less our target all along. But the key is tomorrow, got to hold 3670, 3675 right in that area. Get that bull cross here, get RSI breaking back above 50, and that'll keep Amazon on track. Netflix, I think, actually finished green today, wrestling with this 542.50. I think this is going to fill up to 550. And tomorrow, if you see a little break above 542.50, you can get long and play for that move up to 550 with earnings in 8 days. You could get some short-term calls, not for this Friday, but next Friday, 10 days out. But then you got to be out for earnings. So maybe get that push, get that gap fill heading into earnings, maybe even a little higher if FOMO goes nuts and QQQ gets back online. But your pivot point is 542.50. Google held its breakout. Got a breakout this morning. Of course, gave that back, but held the breakout here at 25.45. As long as it stays above that, everything's fine. Earnings at the end of the month, I think it's still bullish. But if it drops back below into this trading range, I'd exit the position because that would make this breakout look fake, and you'd probably get some kind of a deeper pullback into the trading range. And that's all short-term traders, because if we take a look at the daily, well within the channel, well above the 8-day, above the, everything's bullishly stacked. If you're on the daily, you've probably been in it quite a while. I would just keep, rolling up your stops and rolling up your strikes and staying long, because strong stock ahead of earnings. I like it. Stay long. Semiconductors had a move this morning to recapture 260, came back. Remember, this was a line that we had from before, came back, took a look below, but held it. So tomorrow I'm going to be looking for semiconductors to hold 259.50, 259, right in there. I'm still long, so that was disappointing, but no real technical damage done, and I'm hoping that this 259.50, 259 area holds, and then we can drive up to 262 and eventually break out. I am long calls for July 23rd, a week from Friday. So we'll see how that goes. And remember, on the daily chart, if this thing loads, keep going back to this trading range, we held 258. So if you're on the daily time frame and you're looking out in August, September, whatever you might be, stay long against 258. And if there's some kind of downdraft in the Qs, you'll see a downdraft in SMH. And if you lose 258 again, discretion's the better part of valor, right? You can't wish and hope at that point, because you'd be back in the trading range. Just, take it off, see where it goes, and if it recaptures, then you get back in long. But, if that were to fail and come back down here, then most likely you want to step aside of that. And remember, there's this story of Paul Tudor Jones. In this case, he was shorting Japan, and, God knows how many billions he made on that trade. Everybody talks about it. kind of fabled in trading lore. But he says, nobody wants to talk about the 10 times I got stopped out. And I think that's very instructive. If you're trying for this breakout, right, and price doesn't cooperate, it drops back in the range, you're stopped out. You were stopped out here possibly the other day, and then you get stopped out again, and you get stopped out again, and then it breaks out. You can't be thinking to yourself, oh, it's another head fake. If you've got a process and you've got a discipline and you're following price and it breaks out, get long. And if you got to take 10 paper cuts to get a move to 295, isn't that worth it? So I know it's frustrating, and I've been there a million times. And there's been occasions where I've gotten frustrated and then not taken the real breakout because I thought it was fake. That's the wrong move. Honor your stops, take your paper cut, and then when you get a fresh signal, you can take it. And remember that Paul Tudor Jones lesson. Sometimes to make a lot of money, you got to lose quite a number of times. Take those repeated paper cuts and keep yourself in position. Don't give up on the stock. Don't give up on the setup. And then you'll be in a position to make a lot of money. And to wrap this up, here's the deal. Disappointing day. If you were long Apple, if you were long Amazon, if you were long, all this stuff, mega cap tech, and they pulled the rug in the afternoon because rates rose 5 basis points. That stinks, no doubt about it. And we're going to know real fast, like tomorrow, certainly by the end of the week, if, excuse me, if they keep selling tech off, it was wrong. The trade didn't work. But how many people are going to be wanting to be out of tech? How many people are going to be wanting to be out of tech heading into earnings in 2 or 3 weeks? I don't think they're going to be able to resist. I think they're going to pile back in. I think for the most part, mega cap tech today held the line. It didn't fall apart. No major trend lines or support violations happened. I'm sticking with the trade. And I took some pain today and I made some adjustments, but I'm still long. I'm still long Apple. I'm still long semis. I'm still long Facebook. What else am I long? I'm long TLT. And I've told you exactly the levels on the Google, on the Microsoft, on all those names. I still think they might not run it, go FOMO ballistic into earnings, but I don't think they're going to sell off. So I think the downside is limited here, and unless Powell has a big gaffe tomorrow or says something totally out of character, I think they're going to fade rates. I think rates are going to come back down. I think IWM was the tell that if they thought it was real, they would have jacked cyclicals. They didn't do that. They would have jacked financials. They were down. Let's look at that real quick. Let's look at that. I was going to wrap it up here. But materials down 1%. You would have thought they'd be up. Energy down 0.75%. You would have thought it'd be up. Financials down 1%. You would have thought with a rate rise of 15 basis points over the last couple of weeks, it'd be up. Industrials 1% down. You would have thought that it'd been better. And technology was still up, right? So it held the line. So I think the tech trade is still on. I'm not ready to throw in the towel on tech. I'm not ready to, flip over to cyclicals. I think we'll see that in IWM and financials, in materials. And when we see those starting to go green, I think we'll know and we can flip. So I hope that makes sense. But still, no grand thesis. We're going from level to level. So don't be thinking to yourself, oh, Chris said they're going to fade rates. If rates keep going higher, it's going to hit tech. So we got to watch rates. We got to watch our levels. Keep your head on a swivel. Don't get married to anything, especially if you're in short-term type trades. If you're on the daily, everything is fine. I don't see any problems yet, and I'll certainly be letting you know if I do. So if you're new to the channel, I hope this helps a lot, helps you get your head oriented for tomorrow with Powell at 9:30 and the rest of the week, and we'll see where it goes. But if you appreciate the levels and the analysis, hit the subscribe button and the alarm bell. Get all my content. Jump over to the show notes. You can register for all my content and get everything in a nice, neat package right to your email. I emailed out that TLT trade this afternoon. You would have got that. So register. Be glad to have you. And also, if you're interested, you can join our trading room. And as always, regular listeners, thanks for the support. Pass the link along. Help me build the channel. I'd really appreciate it. So have a good evening. Let's get ready for tomorrow. And we'll see what Jay Powell has to say at 9:30. This has been Chris Buss with Traders Profit Compass. Have a good evening and talk to you next time.